Hello and welcome back to GoldStockTrades.com. Today we have with us George Salamis. George is CEO of Edgewater Exploration. Edgewater can be traded as EDW on the Venture Exchange. Thanks, George, for being here with us today.
Jeb, as usual, great to be back on the show.
George, give us an update on some of the progress that you've made so far in 2013.
Well, starting off the year in January, the receipt of the environmental approval in Spain in December was very well received in January. We noticed that on our first marketing runs through eastern Canada and the eastern part of the U.S., we realized pretty quickly that there's a very short supply of companies out there who actually have environmentally permitted projects in first world jurisdictions, and what that actually led to was some modest investment appetite, which culminated in the $5 million bought deal, which we did in a very, very poor, low spot of the market. To have pulled off a bought deal at that point in the market was a major coup, and I think that just speaks to the product that we have in Spain.
George, give us an update on what sort your project, your Corcoesto Gold project, and what makes it such a compelling investment from the last PEA that was published.
I think sort of top-down, top point being it's a million ounce plus resource that's at feasibility stage, so it's very advanced relative to other projects out there. From an open pit mining perspective, the grades are relatively speaking high compared to the norm, where other companies are mining gold resources in the ground, and from open pits, sort of sub 1 gram per ton. Our resource grades are certainly better than that. But I think sort of the top 2 points, if I was to weigh everything on balance, would be one, first world jurisdiction with infrastructure that's there, and that's huge. Obviously, we don't have to build in the infrastructure that is required in remote projects, which typically is what the cause of sort of capital project blowouts is related to. That's number one. And number two, the jurisdiction risk, which is not there in Spain. Spain is a first world jurisdiction. There's no threat of nationalization. There's no threat of changing the laws overnight. The government in Galicia is firmly behind us, and we have all of those points, which obviously culminated in the granting of the environmental impact approval in December. Those would be the major points in terms of value going forward.
Can you talk to us about the exploration upside and the resource expansion at Corcoesto?
Yeah, sure. We've been running this company, and in fact, the PEA and feasibility process on a shoestring, and shareholders will see by our press releases that we've been trickle feeding finances in just to advance the project along to the stage where we've gotten to. What that has meant over time is that we've been focusing on delivering a project that is bankable, that will deliver near-term cash flow production to our shareholders. But what that also means is that we've had very little money to spend on exploration upside, and it's been, I'm going to have to say, frustrating for me as a technical person, a geologist by background, to sit there and drill off these zones to a bankable level and see that they're wide open, and dying to put holes beneath these open pitable zones that we see that will be potentially mineable in the future. The upside is there. We know that these zones continue at depth. We know that we can, my call is significantly increase the resource from where it's at today, 1.5 million ounces on all categories basis, but we just haven't had the funds to do so. The expectation is, however, Jeb, that once we get into a cash flow situation, we are generating cash. We can apply some of that cash to grow the asset. I think growing that asset from where it's at today will be very easy.
George, as we conclude, we're in a tough junior gold mining market. What makes Edgewater stand out from all those other junior miners out there?
Well, one thing that sort of I came away from the PDAC, and that I would have to say that's the great melting pot of the mining market in general, with whatever it was, 25,000 mining types showing up in one spot in Toronto a few weeks ago. When you walk up and down those aisles, what you see, basically virtually 95% of the companies that are there presenting their wares, basically companies with good exploration projects, but no real asset, tangible asset that you can assign a net present value or a NAV or however you want to measure the value of an asset in the ground to. These companies have exploration projects. Again, they're very valid exploration projects, but nothing that really sort of comes together as a real asset. And that's what really sets us apart from what I saw at the PDAC was we have a product that stands out. We have a tangible asset in the ground with a resource that has gone through the PEA hoops, that is now environmentally permitted and blessed by the government, and it's on its way to the end of a bankable feasibility study, and that really sets us apart from the masses.
So 2013 is going to be a big transformational year for Edgewater.
Oh, it sure is. I mean, there's going to be a lot on the go. Obviously, so the next remit for us is to finish off the bankable feasibility study, which we're estimating for sometime in the third quarter of this year. Everything's sort of proceeding on track for that. Certainly, with the recent appointment of Micon to lead the study, that's big. Obviously, the financing of the mine, and we're almost all the way there in terms of having Barclays and Credit Suisse at the table with $120 million of debt. So what that leaves us with, Jeb, here is about $30 million of what I'm going to call equity to fund the balance of mine development this year, which we're sort of scheduling for startup construction-wise later this year. So what we're doing right now, Jeb, is we're looking for creative ways to fill that gap. And what we're finding is because we have a product that sets us apart and is advanced as it is, we're getting term sheets put in front of us on an unsolicited basis, which the terms of which are starting to become more and more attractive as we head down the road towards the end of the bankable study. And we're looking at these term sheets that could potentially fill that funding gap without necessarily having to go to the market to raise equity. We know the equity markets are now effectively shut. Who knows when they're going to come back? But we know that we have an alternative to fund that gap, which will get us there without necessarily having to dilute our shareholder base with a massive amount of equity.
Well, George, thanks for being here with us today and for giving us an update on Edgewater's activities in 2013.
Thank you, Jeb. It was great talking to you.